Hello everyone, I'm Dr. Stock, and in this video we are taking a look at the economic reports that we got today. Three of the big ones in my opinion. So we have the retail sales, we have PPI, and then we also have the New York Empire State Manufacturing Index that I think were three of the big players. And then not to mention a little bit about Credit Suisse and the further bank disaster that we have that should also be mentioned when talking about what in the world happened in the markets. We have to take all that into consideration because we'll take a final look at the CME Fed Watch tool to try and talk about what we're seeing for the Fed rate hikes coming up, the Fed pause possibly, and the Fed cuts coming in 2023 that just a few short weeks ago was not even talked about at all. And yet here we are, here it is. So with that said, I got an offer here through my channel. Find the link down in the description for Moo. When you click that link and sign up and deposit $100 or more, you get 7 free stocks. And if you deposit $1,000 or more, here's what it looks like. You get 17 free stocks for that deposit of $1,000 more. This offer does end March 31st. We are at the middle of March right now, so take advantage of this because it won't last forever. Use the link down in the description to do it. One last thing, find that link down below for Patreon. Click on it, sign up, get access to my Patreon exclusive content and access to my private Discord and be part of my community. We'd absolutely love to have you over there. That said, let's get right into the content. All right, so nice, clean, easy look that we have here for trading economics on their calendar view that we have. PPI came in month over month at negative 0.1% when the consensus was coming in at 0.3. This is excellent for us because the previous one we got, notice this little R that is not a registered trademark. That is a revision down from what we had the prior month, which was actually quite high. And to see it revised down to 0.3, we're in good shape there. And down here's core PPI month over month got revised down to 0.1. Now we're at 0.0. These are good inflation numbers to have over in the Discord. As soon as I saw them come out at 8:30, I reported over there that this is going to be absolutely excellent for the markets. However, Credit Suisse had different ideas in mind. So that even though this was still upward pressure, made things not as bad as the market could have been throughout the day today. I know it did finish actually not as bad as it was in the middle of the day. Still, this was upward pressure for the markets. Credit Suisse aside, it was. Now, when we look right here at the New York Empire State Manufacturing Index coming in at negative 24.6. So this is a contraction that we have in manufacturing. Down below, it was supposed to be negative 8, and it came in at negative 24.6. Now, let me click on this, and I want to show you the chart. So you can see we've had a lot of negative numbers, so a lot of contraction versus the expansion we could have had. If we go to the 5-year, you can see the downtrend that we've been on. And let me switch to the column chart. There we go. So there's a line for 2022, and there's 2020 right there. So in the middle is 2021, and we had a lot of expansion happening. This could be some of that balance coming through with some of the contraction that we have. However, we need to be really careful. Let me go back to the line chart. And we're going to, right there, you can see the pandemic. Let's go out 10 years so you can see a better look that we're well below where we're at, even in 2016. If we got to 25 years, check out the Great Recession and check out the lows that we've seen recently. Now, prior to the Great Recession, we didn't have that same run-up that we had over here where we went up well above 20. So we could be seeing some of that slow down from the peaks that we were at when we look at these rates. So that's something to keep in mind. However, if this continues, that's a further sign of recession happening through economic weakness. So we do want to keep an eye on the manufacturing indices as they come out. And the more contraction we see, the bigger case we have for that economic contraction, for a shrinking economy, which means possible like low to even negative GDP where we start to get into that recession territory. So the recession has been coming up as a word more and more, and the banking system certainly isn't doing anything to help us out in that area. Now, as for the CME Fed Watch tool, so yesterday we had a 70% chance of a 50 basis point hike. Now we're down to 52.4. So we're pretty much even between a pause and a rate hike for March. And we still have a few trading days left. So let me see. We have Thursday, we have Friday, that's 2 trading days. We have weekend news that can happen. So that's up to 4 days now. And then we have another 3 trading days that happen. So I believe that's 5 trading days to take place prior to getting that announcement from the Fed. So that is a lot of days for a lot of news to come out. We've seen just how rapidly things have declined from it starting off with Silvergate, then SVB, and then that other one I can't remember the name of right now. It began with an S though, 3 S banks. And now Credit Suisse is one of the big banks. And this is bad news for them, and it's not really great news. JP Morgan was down like, I think 5-6% at one point in time today. Bank of America down 3-4-5%. I'd have to go back and look at those numbers. Goldman Sachs was also down. So Wells Fargo suffering, you name the bank, and the banks were just roasting the indices, and they did recover throughout the day, and that sort of saved us a little bit. So right now, it's almost an even chance between pause and 25 basis point hike for March. And I don't know that I ever expected to see us here. I thought before all this banking stuff came out, I said they need to pause. They need to give it time so we can see the full effects. It's in their own words. It's in their own writing. They just need to listen. And well, now here we are with this whole banking disaster. And it's like, maybe we better pump the brakes on this a little bit and, try and stave off any sort of further rot, contagion, decay, whatever, falling apart in the banking and in the banking sector. So when we look at it, May, most likely we're up to 475 to 500. When we look at June, where's the peak at? 450 to 475. So by June, we're anticipating the federal funds rate to not even be between 475 and 5, but 450 and 475. And if we go all the way out to December, because I don't click through all these, going all the way out to December, by the end of year, 375 to 400 is the most likely case, according to the Fed Watch tool that we have. That's incredible because not too long ago, if you look back just a month ago, the most likely thing was that we were at or over 5% with the federal funds rate. And now we're saying at or below 4%. That's incredible. And even not even a month ago, let's go a week ago. A week ago, the most likely case for December was 5.5 to 5.75. So this is something like I put out my own thing that I had for summary of economic projections, what I think the Fed would say. And now that we have all of these reports, I can go through and make a revised version of how I think the Fed is going to approach this and give further commentary on that. So be on the lookout for that when it comes out. Looking at yesterday, 400 to 425, and today with Credit Suisse news coming out, we'll drop even further from that down to under 4%. So 375 to 400 in the federal funds rate. So taking just a quick moment, because I didn't mention retail sales, I do want to just mention it quickly, coming at negative 0.4% month over month, and ex-autos negative 0.1% month over month. So slowing down, cooling off, like I said, that I thought it would from January to February. That's exactly what happened. So we're in good shape versus consensus that we have here also, who saw cooling, and well, that's again what we got. So retail sales, pretty much what we expected, and thank goodness it's pulling back from those higher January numbers that we saw. So let me summarize this thing. The economic reports that we're getting are good economic reports as far as inflation goes. That should take pressure off of the Fed, and that definitely helps what we're seeing with the Fed Watch tool. And then also for either pausing or pivoting to either hold rates where they are or even pull back from where the rates are at. That banking sector thing is sort of helping us there. It's kind of like one of those weird positive side effects that it could possibly drop the federal funds rate. But we also got to be careful because a lot of economic uncertainty and a banking system collapse could put us right back into a pretty horrible place recession-wise. So that's something we absolutely want to keep our eyes on, and it's something that's not going to serve the markets very well. So with this black swan event currently upon us, something that we would hope wouldn't happen, but yet there it is. It always seems to be something. Plus we have Q1 earnings coming up not too long after that. I think I'm in the right place with my short position that I have going with SQQQ. I've built out quite a position in that one, and I think that we stand to see some market weakness falling out from this. So that's what I have for you guys today. If you like my commentary and you'd like to hear more, check out that link down in the description for the Patreon. Click sign up, be a part of the community. We'd absolutely love to have you over there. Also, don't forget about that link for Moomoo down in the description of this video right after you're done watching it, or you can pause it right now. Go down to that description, click, sign up, deposit your cash, get your free stocks. You're supporting yourself, and it also helps me come to YouTube even more often with news and information that I find of interest and opportunity to all of you. Thank you very much for watching. Click the like button. If you like this video, hit the subscribe button to see more of my content. Ring that notification bell to see any time that my videos come out. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.